You're wading through the sea of real estate crowdfunding offering opportunities. You're ready to get your first chunk of change invested in this type of real estate, but you might be swallowed up by all the options. What platform to choose? Which one is best? How do you know what you're actually investing in? And how is this going to get towards your ultimate financial and investing goals? Your lifestyle goals? Whoa. Relax. This is a safe space. No jargon, I promise. I'm going to make things easy. I'm going to cover the 3 steps you need to take to get started investing in real estate crowd funds, all the way from knowing nothing as a new real estate investor, especially in passive real estate investing with crowd funds, all the way to getting that first distribution check into your account. All of this is so that you can grow your wealth faster and live a life by your own design. Probably not hustling away as a landlord, just a guess. I'm Susan Elliott, and I'm on the same investing journey as you. I'm here to build my wealth so that I can live my life by my own terms. Okay, let's talk about how to leverage real estate crowdfunding to make that happen. To make this simple, I've broken this process down into 3 steps. This is your roadmap. Whether you've never invested in real estate before, or you've sweated too many Saturdays fixing toilets in your rental properties. If you've never heard of real estate crowdfunding, check out the video I just made about how this new form of real estate crowdfunding is kind of transforming the game and allowing you, the investor, better access to better deals. More access to better deals, I should say. It's important to know the distinguishing features between the new and the old forms of real estate crowdfunding. Okay, step number 1 is to identify what you need your real estate investments to do in order to reach your goals faster. Now, of course, hidden in that step is the fact that you need to have investing goals in the first place. Otherwise, you're working towards some future scenario that you may not even want. We suggest looking at why you want to invest in the first place. What do you want to get out of your investments? Perhaps you're looking at long-term growth. A lot of us think about investing for retirement, right? So that we can one day not work. Or perhaps you're looking for short-term passive income cash flow right now so that you can focus on that super cool side hustle you've been nurturing along the way. These are 2 different outcome goals. Now, when you look at investing opportunities or that investment summary that you'll find, you know to look beyond the fancy marketing photos of pools and apartment complexes and all of these things and look for the way that the deal is actually structured to get you your return, on top of the business plan and some other elements you'll want to look at. A hint here is that the type of real estate asset is actually not as important as to the way that the deal is structured. And of course, the most important is the actual operator's track record in performing that business plan. So you're going to want to dive into that as well. Let's take a look at 2 investors that I mentioned earlier. Investor A wants that short-term cash flow. They're looking for passive income as soon as possible. Investor B is looking for long-term growth to retire in future year, 10, 20, 30 years down the road. So they're looking for long-term growth. Now, let's take a look at an investment offering, such as an apartment family complex, where we're going to pull out some of these metrics and pick them apart for you. So you're going to see something like 7 to 8% preferred return. The preferred return just means that you're getting the cash flow before anyone else in the deal, before even the owners and the operators. So 7% preferred return with a 70-30 split. That means you get 70%, the owner operator gets 30% of the proceeds at the end of the deal. And we're looking at a 5-year hold time. So that's important to know that this is spread out across 5 years. The final metric is actually the easiest to look at, and that's the equity multiple. You might see a deal that's 1.8x equity multiple. That means that if you invest $10,000, you're going to end up with $18,000 on the end, or 1.8x your original capital investment. That 18x, or that 18,000, is really your $10,000 return to you, that original principal, and $8,000 in total returns. That includes cash flow throughout the life of the deal, as well as the proceeds from the sale of the asset. Now, you've got those metrics, and you're looking at the projected cash flow for years 1 through 5 of this deal. And you're seeing that years 1 and 2 call for heavy remodels. This is a value add opportunity where they're increasing the value so that you can hopefully make some really good proceeds from the sale down the road. But in order to do that, they're going to distribute between 2 and 4% projected return, that preferred return in the first few years. And you're going to accrue the rest of that preferred return. So if they're distributing 2%, you're going to accrue 5% on a 7% preferred return. Now, accruing Accrued just means you're going to get those as soon as cash flow allows. This is really important because if you're investor A and you want cash flow right away, this may not be the deal for you. But if you're investor B and you're like, yeah, give me the returns accrued down the road, I'm just putting this away in my retirement account anyways, then that's not going to matter as much to you. So this is a really good distinction as far as what you want out of your investing goals and how the deal is structured. This is going to help you pick your investments a lot better in real estate. So a different deal, for instance, a hotel investment opportunity, might show that there's great cash flow up front, that short-term cash flow. That's really typical of hotels because you can change the operations of hotels really quickly, night to night, in other words. So there might be more cash flow up front and less of sale proceeds down the end. Now, you might have the same equity multiple, a 1.8x for instance, but the difference here is that our investor A, who wants that short-term cash flow, might be more interested in this type of investment because they're going to get more of it up front than less of it at the end. As a side note, these are actual examples from deals we've offered in the past, and if you're curious about looking at a real investment summary for a crowdfunding offering, go ahead and head to our open deals page and I'll post that link in the notes below. So now you're armed with your investing goals and the type of deal, the type of metrics you might be looking for in a deal, and now it's on to step number 2.
Okay, step number 2 to investing in a real estate crowdfunding offering is to determine how much you can invest. But first, coffee. Much better. Okay, so to determine how much you can invest in a real estate crowdfunding offering comes in 2 parts. The first is, how much do you have to invest? How much have you saved up and are wanting to put into a real estate investment this year? The second part is how much you are allowed to invest according to the SEC. Because real estate crowdfunding is regulated by the Securities and Exchange Commission, you're only allowed to invest a certain amount per year if you're a non-accredited investor. Accredited investors can invest as much as they want in real estate crowdfunding offerings. Now, hold on, I told you there'd be no jargon here, so if you don't know what accredited or non-accredited means, go ahead and take a look at that other video that I linked to so that you can see why real estate crowdfunding offerings actually allow non-accredited investors to do the same type of investing that's only been open to accredited investors in the past. Okay, so how much can you invest? The good news here is that despite that there's a lot of calculations and math involved in this, you don't have to do any of it. All of it will be done for you on whatever website or platform your real estate deal is using to be able to help you invest in this project or in a property. But I am going to go over a little bit of the overview of it here so that you can get a general idea for how much you might be able to invest in a real estate crowdfunding offering per year. Okay, so we're going to take a look at this table. There's some calculations involved, and there's also this magic threshold of $124,000 that you're going to see. I have no idea where they came up with this number. It seems kind of random to me, but just know $124,000 is sort of the magic window here.
Either your income or your net worth is less than $124,000 as of 2023, then you can invest up to $2,500 or 5% of your annual income or net worth, whichever is greater each year. If you look at the first 2 rows, that's an example of that either scenario, right? So if your income, that second row, is $150,000, but your net worth is still below that magic threshold at $80,000, then you can invest 5%, which comes to $7,500 per year in a real estate crowdfunding. Okay, so let's look at the next 2 rows. If both your net worth and income are over that $124,000 magic threshold, then you can invest 10%, but no more than $124,000 per year. So for instance, let's look at that last row. If you make $124,000 and have a net worth of $900,000, first of all, congrats, that's awesome. You can invest 10% of the greater, or 10% of $900,000, which comes to $90,000 per year. So once you know how much you're legally allowed to invest, take a look at those investment minimums presented in any real estate crowdfunding offering. They'll be be really clearly stated. For instance, in the ones we've recently launched, our minimum is $10,000 per investment offering. This is actually much lower than the minimum we have for our accredited only investing opportunities, which is $50,000. And one of the reasons we love real estate crowdfunding as a way to help our non-accredited investors start at lower minimum amounts, and accredited investors, if you're just wanting to get your feet wet in the deal, you can invest at $10,000 as well. But you're investing in the same deal as those accredited investors. You're getting the same returns as those accredited investors. It's just because we're able to leverage these new regulations via this magic little website that's kind of the intermediary. Okay, we're on to step number 3. Before we do that, go ahead and hit that like button and subscribe to our channel if this is really helping you out at all. Feel free to send me comments in the comments below to be able to let me know if you have any other questions. I'd love to answer those. Okay, step number 3. Which real estate crowdfunding platform is best for me? Okay, this one is big. Don't mess it up. Okay, just kidding. You're not going to mess it up. But really, pay attention here because there's a big distinction here. Not all real estate crowdfunding platforms or websites are set up the same way. In fact, the real estate crowdfunding that you're probably familiar with, the big corporations with the fancy marketing, are actually like the mutual fund versions of real estate crowd funds. They're going to have you investing in a blind portfolio of assets where you don't actually maybe know what's going on with those underlying assets in terms of the team that's managing them, how they're acquiring them, the financials on the deals. Now that might sound really complicated, but it doesn't have to be. And it's kind of an essential due diligence step to protect your capital. You want to know where your money is going and what's happening with it and who is managing it. The big mic drop here is, get ready, it's not which platform you choose, it's which team to partner with. Real estate is really about the people. The teams that do the work to analyze deals conservatively, acquire them smartly, and manage the properties wisely can make or break your return. We always suggest that investors meet and talk to the teams that are behind the deal that they're investing in. Ask your questions, understand the process, when you're going to get your distributions, what might happen in the deal, what kind of debt is being placed on the deal, what conservative measures are being put in place for risk mitigation, any kind of questions you have. There's a big list of questions you can ask along the way. This is an essential step to protect your capital. If you don't know what's going on in the deal, you don't know how your money is working out there, right? And you could actually be vulnerable to losing your entire amount. You deserve transparency and clear investment summaries, and someone else who you can partner with who is there to help you learn and grow along the way. That's how we run our real estate crowdfunding offerings and all our offerings at Goodegg Investments. We're here to help you learn, answer your questions, and build your wealth faster. The platform, then, is really just this intermediary step that we use so that we can follow all those SEC regulations and do those income calculations a lot easier, right? So you're going to hit that Invest Now button, and the website or platform is going to walk you through every step of the process. At that point, hopefully you've already talked to one of our team members if you have any questions. You're going to be able to sign the documents, you're going to be able to wire funds, you're going to be able to do those calculations all within the platform. After that, our team will update you monthly with what's going on at those properties. We'll send you quarterly financial statements so you know the numbers behind your deal, and you'll get those checks right into your bank account. This process shouldn't be confusing. If it is, you might be investing alongside someone who doesn't care about your satisfaction with their partnership or your happiness level. And I don't know what that says about how they handle your money, but probably not something good. All right, that's it today. Please hit that thumbs up and subscribe so that we can help get this information out to more people. And if you have any questions, hit them up in the comments below. Thanks. Have a great day.